Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, the BC government yesterday released its budget for the year that included a 30-point plan on housing. Now, one of our listeners couldn't believe how many of the points resembled things you've brought up here on House Street over the last year and a half. Some points are almost identical to what you proposed here on the show. Can that be a coincidence? And how can listeners profit from these changes, and how long will these changes take before they end up being seen in our pocketbooks or taking things out of our pocketbooks?
Yeah, so the 30-point plan, I mean, it was pretty exhaustive, the amount of real estate, excuse the pun, that they tried to cover in this report. And yeah, any of the listeners who want to go back and listen to old shows here, will find, several of the topics that, we discussed in the show, and resolutions that we suggested, have been brought about in this 30-point plan. Certainly, when we sent to David Eby when he was in opposition a couple of years back prior to the election, the right to own plan, as it was formulated back then to him, we're seeing, I guess, when he made his comments in the newspapers back then, citing our concerns, he's gone right ahead and followed up and brought it in. The government has brought them in this policy. So how much, I really suspect that he had a big hand in this policy, because we only sent the information to him. I know you've got a lot of listeners out there who follow on social media, and I suspect that it's been spread around that way as well. So the plan itself, Jim, I think that there was a lot of good ideas that they brought up in this plan. Let's hope that they fulfill the obligations as outlined in the plan, and it doesn't just remain a plan, but it actually, we see some action going out your way on this. It is exhaustive in terms of what they're trying to accomplish. So my belief is that you try to focus on one segment or one aspect of a problem, get that resolved, and then determine how you're going to respond to any further problems. What they've done here is they've thrown a blanket over the entire housing conversation in British Columbia, and on top of that, they've thrown a blanket over top of money laundering and concerns over a lot of illegal activity that's probably been ongoing. What I will say is, in the plan, they still have not cited that they're going to instruct realtors to supply their FinTrack forms. I think that was the easiest solution. That solution was not brought forward, although they have mentioned specifically in number 13 that they're seeking permanent provincial federal action to combat money laundering, tax evasion, and avoidance, which is really why you want to collect those FinTrack forms. But I think what your listeners can take from the plan itself is the portion of the plan referencing stabilizing the market. What your listeners need to understand is that there has been a total change from the home trading infrastructure in British Columbia that will result if this plan is enacted. What that means is the terms that you own a home under how you work your way up the property ladder, the cost associated with that journey, the net wealth that you're going to have the potential to accumulate over your lifetime. These things will all change as a result of this plan and the changes that have already taken place in British Columbia. Your listeners need to understand that realtors, the practice of dual agency, is probably still going to be allowed in a certain way in British Columbia. The real estate boards have been pushing back against this so hard, and it appears Michael Noseworthy, your superintendent of real estate, is not being supported by the Real Estate Council of British Columbia. Well, that's because it's filled with a board of directors that are real estate agents. But that change was going to be monumental in how the home trading infrastructure changed. The foreign buyer tax the BC Liberals brought in, that was a change. The mortgage lending rules that the OSFI brought in the fall of 2016 and the spring here of 2018, that was a change. Those changes, the changes that have already happened to your infrastructure, which impacts home selling prices, those changes have still not been recorded in the real estate data. Only small portions of the real estate data have reflected it, like single detached homes dropping 30% in value, in some cases as much as 40% for ultra luxury class. Another category of home which was specifically addressed in this 30-point plan that came forward yesterday. So you take all of those changes that are already impacting your market, but that the data is not showing how they are impacting it, and add on now a new 30-point plan. And because of the portions of the housing market, or the housing infrastructure that this plan covers, all interact with one another, the outcomes of this plan are going to be monumental. The odds are highly likely that the BC Liberals, who should be penalized for the eventual house price correction that's going to be come public knowledge here over the next short while, it's going to be blamed on your current government. And that will be wrongly so. Because this 30-point plan, Jim, it is going to take years before you see the real impacts of this plan hitting home. The impacts you are going to be seeing in the rest of this year are all a result of previously made changes to the home trading infrastructure. When I look at this plan, Jim, yes, they went ahead and brought in a foreign buyer tax, which we called a foreign owner acquisition tax. Our max was at 17%, only because we didn't think that any government would go ahead and slap on a 20%, 1/5 tax. This government has done that. They've lowered the hammer on that component of that category of home buyer, and they're also taking back end works to close loopholes that we had discovered in the original plan the BC Liberals brought out. They've expanded the plan, so it's no longer now just Vancouver. It's virtually the major municipal areas in British Columbia are now all covered, the ones where they believe it's impacting. But I also want your listeners to understand this. Number one on their list was tackling speculators who are driving up housing costs. That is the number one point mentioned in the plan. And what I will tell your listeners is this. Your current house prices have zero relationship. There is no causation between speculating purchasers, and housing costs. There is zero correlation. Between the first quarter of 2008 and the fourth quarter of 2017, the average purchase price paid in Vancouver increased 71%. 71% of that is made up under the old rules. The old rules that include speculators, but the speculators did not impact the housing prices. It is a myth that enough speculators can be entering a market to change housing prices. That is a myth. 100% of the 71% increase over that 10-year period has got to do with simple changes to how home buyers are buying houses and nothing more. The exact same mathematical calculations work in Toronto, in Montreal, or in Vancouver. They are all the exact same calculation. It has nothing to do with speculators. Now, do I think speculators should pay their fair share of tax? 100%, which is why you collect FinTrack forms, which is why the CRA should audit people. It's why you should have to disclose, and it's why the penalty should be extreme when you don't disclose. Number 2 on the list was increasing the foreign buyers tax to 20%. Your listeners need to understand, in the last 10 years, from 2008, the beginning of 2008, till the end of 2017, we went through the Great Recession. We went through a surging house price. We went through all of these myths and propaganda and the benchmark price in BC, all of the press going crazy trying to explain how housing prices increased 71%. And we can explain how they increased 71 exact percent. And it's simply home ownership math. Your foreign buyer component, they were buying ultra-luxury class homes, and those purchases were not enough to move the market. All it did was move the benchmark price metrics, and everybody believed them, which is now coming home to roost. Expanding the foreign buyer tax was number 3 to outside areas. Great move. I believe that the foreign buyer tax should have been increased to 20%. We personally believe it should have been variable and it should have changed to each municipality, because we know how each municipality works independently of one another and their housing markets are not the same. That said, governments don't understand that. So at least you now have a tax that will stop your housing stock being moved to foreign buyers. Increasing the property tax on the value of homes over $3 million was number 4. And I think if your listeners go back and listen in old shows, once again, you'll hear how we were explaining how foreign buyers of ultra-luxury class homes were going to get a property tax decrease, while Canadian millennials who bought condos were going to pay higher property taxes. The government realizes that that was true, and they have gone here and they've attacked it with this $3 million threshold. What I'll say about, I'm talking about the school property tax now. This was number 5. The school tax rate. Now, the tax rate was not enough. Certainly the city of Vancouver or the city of Victoria, the entire property tax should have been increasing on property over $3 million, not just the school tax rate. The school tax rate is only a small portion of the property tax. That should have increased too. At least it's a start, because I think if you read into this report, Jim, most of these things are just a start. The increase in the property tax on value of homes over $3 million. Well, where the mistake there is that means regular Canadians are now going to pay a higher property tax. What your listeners need, land transfer tax. What your listeners need to understand in British Columbia is your property ladder is not like exists in other cities across North America. The property ladder in other cities is actually a pyramid. In Vancouver, it's an oddity because it's actually a column. There are not enough homes of each different category to allow a homeowner in Vancouver to move through their life cycle of home ownership. They do not exist. This policy will not change that. This policy will only add more bottlenecks to the housing stock, and it is going to limit the lifestyle that most young millennials are going to experience if they want to keep living in the greater Vancouver area. Number 6, allowing online accommodation providers to apply PST and MRDT on short-term rentals. Foolish. You're legitimizing short-term rentals. You're legitimizing it by saying you pay tax and you can do a short-term rental. This only serves to improve the government coffers. Your listeners need to understand everything I have just said from 1 to 6 serves one purpose: fill the government coffers with tax dollars. And this matters only because of the rest of the plan. The last one on the stabilizing the market area of the plan was reviewing the homeowner grant to provide fairness to renters. Now, your listeners will know that when they instituted the homeowner grant increase to $37,000, I explained to your listeners that all that was going to do was increase the purchase price by $37,000. Everybody wonders, why did housing prices go up for condominiums by 25-30% at times last year? That was because of the homeowner grant. So on top of what the normal appreciation that was expected, you had to throw on another $37,000 onto the fire, which is about another 10%. That took a 15% increase to 25%. They're reviewing the homeowner grant to provide fairness to renters. I believe that's a good move. The only thing you have to understand is millennial home buyers are already supplementing renters with their taxes. If you bring in rent controls, you are going to supplement them further. Your municipal tax property tax dollars are going to build housing for the needy in your community. That's where the municipal government gets their money from. Your property taxes are already supplementing renters. There is a certain point where we say, Jim, enough is enough, and number 7 really crossed the line. Renters are already being treated fairly, in all fairness, by young millennial first-time home buyers through their payment of their property taxes. If the property taxes are not creating a surplus, which obviously they are, because the city of Vancouver is spending extra money to build affordable housing, then they should have raised the property taxes. They didn't do that. They just have said they're going to remove the grant and they're going to use that money some other way. It is such a negligible impact on the housing market. It really doesn't matter. What they should have done is explain to everybody, if you add $37,000, give a $37,000 credit to a buyer, it's going to all the buyers in a certain category of homes, it's going to raise the purchase price by $37,000. That's just the way people buy homes. So that's the first section, Jim. I think there are 5 sections in there, and I hope that I've made things a little bit clearer for your listeners in explaining that plan.
Well, the bottom line is it going to make housing more affordable for the average person, or is this just a tax grab? Okay,
so it's a tax grab for sure, which they claim they're going to respend on those less fortunate in your society. Through the renters or the supply of affordable housing stock, subsidized housing, or the homeless. Okay, so that segment is true. Now you're saying to me, Ross, everybody wants to know, is this going to impact prices? The changes that are already ongoing in your housing market were determined 2 years ago and a year ago, and now you're getting now the consequence of the latest OSFI rule that came into effect at the start of this year. It will take 2 years before people even realize what this latest OSFI rule has done. We are only now ourselves able to record the previous OSFI rule change from November of 2016, because only now are we getting to a year rollover where we can compare the change in the market as recorded after November of 2016 against the second comparable month, which is the second year. The second month, rollover month where that's happening. We also have to take into account how the market is not structured the same this spring as it was the spring of 2017. It's a totally different cycle now. So you have to adjust for those things. What your listeners need to understand is that I can explain 71% of the house price change that has taken place in the last 10 years. To have prevented that 71% gain, the government had to act 10 years ago. They had to act actually even further back. About 2003 is when they needed to start acting to prevent that 71% gain. Okay? That is already over. People who were 25 years old are now 35. This plan will take a minimum 10 years to be fulfilled, and then it will take a minimum another 10 years before the consequences of the plan are fully understood by current house price metrics that people buy and sell houses through. Okay, so that's another 20 years. That means the 35-year-old is now going to be 55. You can't wait till you're 55 to make a home ownership decision because you've lost the ability to accumulate wealth through long-term investing in real estate. Now, I'm not saying you should go out and buy right now, but what I'm saying is that you can't wait for these items to be revealed, the consequence of all these items to be revealed. I mean, you can trust with what I'm saying, I guess, and you can go ahead and gamble on the next 20 years with what I'm telling you here today. But I think that would be a foolish decision to make. Even though I know what I'm saying is right, I would never encourage anybody to go out and do that without me being able to prove to you what I'm saying is true. I know that this plan will take 20 years before the full consequences are realized. I also know, Jim, 20 years from now, the interest rate environment that people will be participating in to buy or sell a home will be totally different than what it is today. We may be on the down cycle of the interest rate curve next time around, 20 years from now. I fully suspect that will be what's happening. And people need to capitalize on that next time when it happens. The answer is complicated in terms of what is this going to do to your market. I can only explain it to you this way, Jim. It depends on how old you are. It depends what category of home you currently own or don't own. It depends on what your life goals are via home ownership. And it depends on what compromises you are willing or not willing to make in order to attain your ultimate home ownership goals. Because all of those factors are impacted dozens of times in this 30-point plan. Individual home ownership plans need to be lived out by homeowners. I understand that realtors, Korea, the banks, the financial planners, the mortgage brokers, they all want you to fall. They want to have one set of rules that they can apply to everybody. But that's the problem with home ownership. You can't apply one set of rules to everyone. There are dozens of rules that apply to each person, and how those rules will impact you over your next 30, 40, 20, 10 years of ownership are all going to be different. What I can tell your listeners is this. What changes take place over the next 24 months have nothing to do with this 30-point plan. Nothing. The changes that are already recorded in the data will show up over the next 12 to 24 months. If you're making the wrong decision now, that's your fault. I have explained freely on this show. You can go back and listen to show after show after show after show. And everything that has been talked about has been virtually 100% accurate months and months later. What I know is that you need an individual plan. This government 30-point plan is going to impact you over the next 20, 25 years. No one is the same. Everyone needs their own advice.
We'll have more with Ross Kay right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're speaking with Ross Kay. Ross, much of the concern right now about housing involves either millennials or baby boomers. But, of course, as one group is starting to look at real estate, the other is probably looking at downsizing and making choices there. So what can we see on the changing landscape of housing in Canada due to two different groups with two different goals?
Well, they need to have hundreds of different plans. What I mean to say, Jim, is that the home trading infrastructure, the home ownership infrastructure that exists in the GTA in Ontario is totally different than the one that exists in Vancouver, or the one that exists in Calgary, or the one that exists in Montreal, or the one that exists in Halifax. Those markets are all impacted by different variables, which, when people make changes to the infrastructure, all changes the decision-making process. You have a series of changes that have taken place in British Columbia that are totally different than the minor changes that have taken place in Ontario. You add on your 30-point plan, and that is going to have wide-ranging consequences for a long ongoing period of time that will not happen in Calgary. That's just the way it goes. So the millennial or the baby boomer, the decision that they need to make is dependent upon what market they own their house in. It depends on the category of home that they own. It depends on how much longer they want to stay in their house before they move. For the millennial, it's the exact same discussion. We have a goal of owning a single detached house in the greater Vancouver area by the time we're 45. That is a totally different discussion than someone says we're going to be happy living in a one-bedroom condo in downtown Vancouver by the time we're 45. The homeowner, the way that you work through the property ladder is totally different in Vancouver, Calgary, Toronto, or Montreal. They're totally different. If you approach them in the exact same way, then you're going to be financially penalized because of that. And remember, with home ownership wealth, it's not about how much you pay for the home. It's how much money you have made in your home over your lifetime. Baby boomers right now outside of Quebec. So if you live in British Columbia, Alberta, or in Ontario, your net wealth tied to the family home is it dominates your net wealth. So a house price correction over the next 4 or 5 years could really just hammer your ability to even retire, let alone retire in the lifestyle that you've dreamt about. The governments are doing nothing for baby boomers. I know a lot of your millennial listeners will, they benefited for all the house price gains. Just watch what happens over the next coming years, folks. The millennials just need to watch, because anybody who is ignorant enough about the housing market to not understand that interest rates are the sole driver of house prices doesn't know what they're talking about. Interest rates drive the entire housing market. The drop in price that you have witnessed from 1990 forward is all because of a lower interest, from 1983 forward, has all been because of falling interest rates. Nothing else. On the rising interest rate scale, you have to understand that housing prices won't go up as rapidly. But to the millennial housing buyer, Jim, the millennial housing buyer is going to pay less interest cost to the bank. versus what the baby boomer had to pay. The baby boomer had to spend so much money paying interest to the bank. They will be no further ahead than the millennial will, who has to pay less interest but more principal on their property. That's just simply how it works. It never changes. It never will change. It's always the same. What changes is the moment that is the timing of when you should be getting into the market, when you should be getting out, when you should be trading. In other words, when you move up the property ladder or when you move down. The timing of those steps is going to dictate how you retire later in life. For the vast majority of Canadians, this is the way that it's going to be. I'm going to say for millennials, it's going to be increasingly important because the pension system, certainly any private pensions, unless you're a government worker, are probably not going to be there. You're going to have to save money yourself. You're going to have to budget for your retirement totally different than the baby boomer who worked at Ford and planned on retiring with a full pension, which in those cases they still are. Or the steel worker, or the government worker who lived a lifetime of wage increases and great pension plan setup. Those opportunities are no longer going to be there. So the concerns are totally different depending on where you are in the property ladder, your age, what your goals are, and where you're going to be. This is such a high-level discussion, Jim. It's why real estate agents never discuss it, because it's inevitably going to say, no, you shouldn't buy a home for the next 2 years until prices come down. In other words, the real estate agent won't make any money for 2 years if they were to give that advice. Or they have to encourage someone to sell their property now with the understanding they're probably going to lose some equity selling it versus had they waited a little bit longer. But at the same time, they've eliminated risk by doing so. If a real estate agent does that, they can be sued, and it's against provincial trading legislation in every single province in Canada, because real estate agents aren't trained in how the housing market functions or how house prices go up and down and why. They don't receive any training in that. So it sounds like a very simple question. I can understand the concern that all groups have, but it depends on who you are, where you're living, what your goals are, and what risk aversion or risk tolerance you're willing to put up. You know, your home is really no different than any other financial asset you're going to invest in, listeners. And I understand it's never been discussed that way in the history of Canadian housing. We believe the largest single asset class that you own is home equity. It needs to be treated with the same respect buying bank stocks is, investing in a savings plan or GIC at the bank, or putting money into your pension plan.
We'll have more with Ross Kay right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, last week, both the Canadian Real Estate Association and National Bank released their latest assessments on Canadian home prices. They mirrored exactly the forecasts you made on the show months ago. Why are your forecasts so accurate, and how come you're so ahead of everybody else, and how can our listeners take advantage of that?
Well, you can take advantage of it by understanding that the difference between someone who times the market to get in and out or trade homes versus someone who doesn't time the market when getting out or trading homes is going to be, hundreds of thousands of difference at the end of your lifetime of ownership. The Canadian Real Estate Association and the National Bank, and I know I go on and on about this on the show, Jim, what they're talking about when they talk about home prices is actually how much the buyer is paying for the homes they are buying. It is not a metric about house prices or house values. Now, people get confused with the supply and demand issue. Oh, Ross, the bidding wars. Oh, this is what a house is sold for, so this is what it's worth. That's what market value is. That is a crock of BS. When Korea and National Bank, as I've said in your show dozens of times, when you plot them on a graph, the Korea MLS HPI, the National Bank Ternet HPI, and the average selling price in Canada all match up exactly 100% the same since the day they were launched. They have never changed because they don't measure home prices. It is a fraud that they are pulling on you. Now, they are not knowing, I can't say it's a fraud or fraudulent, I guess, because they're not actually aware that they're not really doing what they claim to be doing. In other words, the Canadian Real Estate Association and the National Bank and Ternet have no idea, they have no idea that they're talking about purchasing power and not home prices. They have no idea what I'm talking about. They are economists. The head economist for the Canadian Real Estate Association is Greg Klomp. He has never sold a house, except maybe his own, in his entire life. He doesn't know how the MLS works. He doesn't know the history of MLS. He doesn't know the history of housing metrics. He doesn't know that 3/4 of the data is never released to the public because it covers up the failure rate of realtors. The new sales to listings ratio is not a metric anybody with any knowledge of the housing market would ever use. They are ignorant if they use it. The failure rate, you can use it because it's 100% accurate. Always will be. Your listeners will be shocked to understand that over 87% of all home sellers failed to sell their home in the month of January with a Canadian Real Estate Association realtor. Okay? That's what the failure rate is. You can't run a business when you fail 80% of the time. That's why they don't release it. That's why they talk new sales to listings ratio. That's why those correlating metrics have been justified as causational, not real. The reason why we can tell you what the Terranet National Bank House Price Index is going to record and the Korea MLS HPI months in advance is because those prices have already been measured in the sales data. You can't change them. They are a buyer side metric. They have nothing to do with house values. Nothing. And in British Columbia, it's about to get worse because RE/MAX this would only happen in British Columbia. If they bring this in to Ontario, if RE/MAX does this in Ontario, I'll be shocked because they're not as stupid as they are in British Columbia. Excuse my language. I mean the realtors, the RE/MAX realtors in Western Canada. It's called RE/MAX Western Canada for your listeners who don't understand. RE/MAX Western Canada is bringing out an automated valuation model on remax.ca, where supposedly your listener can go there, type in an address, and magically the house price will appear what the house is worth. So in other words, what RE/MAX is saying is, we know in the United States, Zillow has faced class action lawsuits. Their AVM model is automatic valuation model tool. Their Zestimate is flawed. They know that every appraiser in the United States of America laughs at Zillow. RE/MAX is bringing it in here in BC because they think they can pull one over your eyes. They think this is going to bring viewers to their website versus realtor.ca. They also know that Zillow is talking about coming north of the border. It is highly likely that the Canadian Real Estate Association staff, not the members, are going to be looking to get referral fees from Zillow. And we are talking massive referral fees if a CREA or B CREA or OREA, any of the real estate board staff are able to secure a contract with Zillow, they get what's called a kickback. And it is massive. These kickbacks have been ongoing for over a decade. They've been hidden by the real estate staff of the real estate boards from the members. Now, I know this to be true because the CEO of the board I was with took my information that showed he was getting someone was getting a referral fee at our local board, and he threw it all in the garbage in front of the board of directors. Subsequently retired when all of these sort of details clouded his viewpoint on who he was. My forecasts are accurate because they've already taken place. Okay, I can't change the data. The data already records where the market is headed, and you can't change that path. In British Columbia, these changes that have taken place, people who are going to think that the changes that are going to be recorded in the market as a result of this plan are simply wrong. I know where house prices are going to go until the market turns, and then I can forecast where they're going to go again until it turns once again. These paths are exactly the same. They can't be changed. I know what an average house is going to be purchased for this year and what it's probably going to be purchased for 5 years from now, because I'm looking at interest rates and I'm looking at how the home buyer purchases a home, and I know where the demographic groups are located in Canada and each regional housing market, how they're moving through. I know how your home ownership stock is owned, so I know what triggers will cause one category of homeowner to trade up for another home, or one category of homeowner to trade down for another. I know how all those are going. Our firm tracks all of those metrics. That's why we're 100% accurate. Now, 100%, I mean, you're always going to have a little tiny flaw because of the way that they report their real estate data, and because there's a little tiny bit of difference between not how the National Bank methodology and the CREA. But what I will say is, since those metrics were created, you go back from when they started till today, it's 100% in line with the Canadian average selling price. But your listeners got to be asking, how's that possible? They only measure 11 or 15 cities. How can they be matching up when they're measuring houses that are when they're not claiming to be measuring houses in the Yukon or in northern Manitoba or in northern Saskatchewan or in mid-Ontario? How come they still match up to that average, which includes all those things? It's because it's buyers. It is a buyer-side metric, and it doesn't change no matter what city you live in Canada.
Ross, thank you so much for chatting with us.
Thanks a lot, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HouseStreet.com radio. Find us on Twitter at HouseStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HouseStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.